Hey! Annie, what was that?
We don't care about the shutdown. We are trying to weekend up. Great movie, Field of Dreams, one of my all-time favorites. And today I want to talk a lot about building. Let's jump into the split screen, see what's going on with the markets today. Yesterday was a good day. Today we're seeing a rally back in stocks, and that is impacting the 10-year Treasury, which on the preview yesterday, I noted the Treasury falling below 4% for the first time in over a year. If we look at the charts, though, this is what's interesting, guys. This is the September, actually, this is a year-long timeline of the 10-year Treasury, and we have been at pretty much lows for the year since early September. So we're going on about a 45-day streak, and we just dipped, as you can see right here, dipped below 4% for the first time in over a year. Taking back some of those gains today that we saw yesterday. Part of that is just the stock market rallying a little bit. The money is coming out of bonds and back into equities. We're still at a good point. Rates are definitely reaching long-term lows, and so that's a great thing. I'll do a deeper dive into that in just a second. But one of the things that I'm noticing more and more, and let's listen in regarding home builder sentiment, up 5 points this week with an estimated increase of only 1 point. Home builders are winning. I've been sharing a ton about this with you guys. They're getting right on price, but more importantly, they are winning the incentive game, where we've got builders partnered with that are offering between 5 and 10% concessions to buyers up front to lower their interest rates. Let's take a listen to this.
NAHB Chairman Buddy Hughes said, quote, combined with anticipated further easing by the Fed, builders expect a slightly improving sales environment, albeit one in which persistent supply-side cost factors remain a challenge, end quote. Now, the
interesting part about this is that they're focused on their confidence with what they've been able to do with adjustment of home size and incentives to attract more buyers. But they're talking about something that existing home sellers really don't have to battle with, and that's supply side cost factors for labor, material, things of that nature. If you've got a home that's already built, you're not worried about the cost to build it today. And I think that gives an advantage to existing home sellers in this market. So builders are building confidence because they're applying the tools that are meeting the needs for today's buyers. We are building some rate momentum, which I think is good heading in, as we're now in Q4. I want to also talk about building equity. This is super important as we're talking with more and more folks about refinancing. The same can be applied towards a purchase of a home. If you're able to capture a rate today that's lower than what the rates are estimated to be at the end of 2026, it doesn't make sense to wait. It doesn't make sense to wait really if you're a current homeowner, and it doesn't make sense to wait if you're a current home renter, because there's some things you can do to enhance affordability and build equity faster, even if signs are showing that we may have started to peak on price and we're seeing some pressure downward on pricing across the country. Example in this scenario here, it's on our MTG dashboard, which is our client dashboard. You can also view that, is if you were at 6 5/8 right now and you refinance to sub 6%, 5.875%, you'd save about $250, a little less than that. Now you could pocket that money knowing that your healthcare premiums may go up next year and the cost of everything else has gone up already this year. It's nice to save about $3,000 in outflow per year. But what you can also do is continue to make the same payment you have now and reinvest that $230 in principal reduction each month. You would shave 4 years off your current mortgage. 4 times whatever your payment is, or 48, times whatever your payment is a lot of money. In addition, you could invest a little bit of your equity or a little bit of the seller credits to get a rate below 5.5. Now you're saving almost $350 a month. You could split that up, keep some of it as cash flow for your monthly budget, and then apply the rest of that savings towards your principal reduction, drastically increase the rate at which you pay off your house. As we start to look at more refinances for folks, the big question is, what is your equity position based off of when you purchased? If it were a couple of years ago, 30-year traditional mortgage is not meant to pay off very much in the first few years. And if prices haven't risen a ton, which we've been noticing, people are not in the best possible position. So another way for them to build equity, drop the rate either on a seller credit or use a piece of the equity that they have currently and continue to make the same payment, thus hammering down their principal. I actually show it here in a scenario for buyers. We're actively writing offers with these folks and we're looking at different options. But if they were to lower their interest rate via seller credit, even if they would like to pay a bigger down payment, they can pay a payment associated with a lower down payment and really hammer their principal. So we're talking about builders' confidence. We're talking about building equity smarter. We're building some rate momentum. And I want to build the best possible path for buyers to understand, buyers that you're working with and buyers that your sellers need, how there's a better way to structure their home financing. Finally, if you want to build your real estate portfolio, the product highlight this week coincides with our featured property. Our PLS program is our private label security. It's designed for people buying second homes, vacation homes, or rental properties, investment homes. And this particular product for us very much mirrors the type of financing you used to get when you bought a second home, which was very similar to your primary. So we've taken some of the margin out so that we can make it more affordable for people to own second homes and investment homes. That's our PLS. The product highlights are down below. The particular property we're featuring this week is Judy Richardson's up in Northern California. This is in Georgetown. Kind of fits with the Halloween theme. It's a little spooky, but very cool. It's a bed and breakfast, operating as a bed and breakfast, over 170 years old. So this is pre-Civil War build that can be yours for the low, low price of $1.5 million. Guys, there's nothing like this. This is pretty unique. And we actually have a unique product that would allow someone to purchase it. Finally, when it comes to building, I want to build a community here. I've worked with so many of you for so long, and I love doing so. I want to make sure that we're growing our community. Any feedback or any other things that we miss on the weekly that you want us to touch on, please just let us know. We appreciate you watching. Cheers to you. Go have a great weekend. Let's build something awesome together. Weekend up. Bye.